E-mini S&Ps have a rough end of the week. The two-day sell-off culminated in a move from, we were trading close to 4,600 in E-mini S&Ps a couple days ago, and we're going to end the week closer to 4,400. So a big move. Obviously, a lot of that coming yesterday on the Fed Bullard comments, where he talked about the Fed being more aggressive and having perhaps tightened 100 basis points by July. That is not something that the market anticipated. And then the rising geopolitical risks that we hear between the tensions between Ukraine and Russia, that elevated on Friday, pushing equities down even lower. So at this point right now, the market, the seemingly tug of war between Fed policy, expanding economy, and now geopolitical risks. The fear side of that is that the geopolitical risk heading into a weekend sort of took center stage, and that's why we saw the continuation of the sell-off. We opened the week right around 4,500. We nudged up very close to 4,600, and we are going to end the week closer to 4,400. So wide ranges, but we did see that two-day sell-off and actually brought us back below the 200-day moving average, which is a momentum indicator for many. Being south of the 200-day moving average obviously would be negative to the indices, and that's exactly what we saw this Friday. So what does this all mean for volatility? Well, the VIX index, which moved higher yesterday, moved from 20 to 25 yesterday on the Bullard news, moved from 25 up north of 30 today. So it's seemingly a little more fear priced into some of the geopolitical tensions that we're reading about heading into the weekend than maybe about the Fed raising rates more quickly than anticipated. So at this point, volatility remains elevated across the board in all asset classes. The equities are no different, but getting north of that 30 mark, heading into the weekend is a rarity unless, and of course you have to say unless, there is a reason for it, and that is increased tensions and uncertainty for what happens over the weekend. Lastly, what do we have next week? So we have a lot going on next week. We had a lot going on this week too. CPI was the headline this week, along with those Bullard comments and Ukraine and Russia. Next week we get PPI, so follow suit. We should see elevated PPI numbers, maybe not quite as elevated as we saw the month before, but certainly around 8%. Inflation in the producer price index. Likewise, we'll get retail sales, which are expected to see a big rebound from a disappointing December. And then we'll talk more, we'll get the Fed minutes from the January FOMC, and it will be very revealing, I hope, that we might see some clarity on whether the Fed was actually talking about raising rates 50 basis points at the March meeting, or if that was sort of market generated. At this point, 25 basis points is priced in at the March FOMC, but there's been a lot of whisper talk that they could go 50. And after Mr. Bullard's comments, certainly expectations went up to as high as 80% odds yesterday that they would go 50 at the March FOMC meeting, but that has backed off since then, now right around 50-50. So the minutes could be a bit revealing. Likewise, we will continue to watch what's going on with Ukraine and Russia. As those risks remain elevated, equity prices will likely remain lower, or at least have obstacles to moving higher. So equity markets, after starting off the week higher, finish much lower as rising geopolitical risks, rising Fed uncertainty, and economic question marks sort of hang over the market. It'll be very interesting next week to see if we can get some of these risks pushed behind us, and equities can then deal with not only the economic impacts of what's going on, but deal directly with what the Federal Reserve might do. And that may be more aggressive Fed tightening than they had originally thought.